Hello to all traders and welcome back to another market review brought to you by Orbex. So where to begin and probably where we're going to be staying for the next few sessions is that the Fed cut by 50 basis points last night. Was supposedly going to be 25 basis points, but it wasn't too much of a surprise to some traders. There were bets that the Fed were going to be more aggressive, more hawkish, because they want to try and get this interest rate down back to when the pandemic began, basically. So this is where we're trying to get to. Obviously, the inflation target of 2% is pretty much being met at the moment, trading at 2.4 to 2.5% at the moment for the interest levels. Inflation levels. So interest rates, if the Fed has cut 50 basis points, you have to think that on the next meeting they probably will go aggressive once again and be another 50 basis points lower. So what will that mean for gold and the dollar? Well, we saw quite a bit of a whipsaw effect in last night's trading. We saw gold hit a record high and then actually start moving a bit downwards. But from the beginning of today's trading, I've got this on the 8-hour chart at the moment, we are seeing a slight pickup again above another record high, as you can see here, really starting to test these levels. And if I just bring it back on the weekly chart, I just want to kind of emphasize where we're at the moment. And it's just phenomenal the way gold has really reacted over the past few trading sessions. As you can see here, record high after record high, not really slowing down at the moment, but we're just plateauing for now because we are getting more. Well, the market is digesting the news a little bit more. Obviously, we've got Bank of England interest rate decision coming up. We've also got the Reserve Bank of Australia next week, expecting to possibly hold, but they could surprise a lot of traders and cut as well. So a lot of central banks basically have had enough. They've started cutting, and we're just going to basically get on with it and see the whipsaw effect in the market. Let's just go on the 4-hour chart for gold, because I just want to show you what it meant last night. As you can see, this big spike on this undecided candle here, whipsaw effect to the upside, reaching, just touching at 2600, which we did obviously think would happen at some point, but the Fed has made it happen a bit sooner rather than later. So 2600 is the next target now, very firm resistance there, but 2700 is the key level that we're looking at for the next move, and that's not too far away if you think how much gold has moved in the last few sessions. So $100 move to the upside, or just over at the moment, because we're trading at 25.85, 25.90 at the moment. So that's really looking likely that we will be seeing that by the end of this year for sure. So let me know what you think about gold. Where are we heading to next? Are we going to get our consensus back to 2700, and will we see more of a dive on the dollar? Because at the moment we were in this kind of sideways transitional period at the moment. Obviously a dip to the downside, but that's recovered nicely, but now holding firm support just in the mid 100 area. Obviously it's very vital that the dollar doesn't break the $100 psychological support, otherwise we could have more of a dramatic sell-off in the near term, most probably, but obviously we'll have to wait and see if that does happen. At the moment, just kind of, as I said, just whipsawing through this particular channel. For me, you know, we're just seeing the $102 being a bit of a resistance down to the mid 100 area. So not too much in the surprise for the way the market moved, just a bit more of a slight surprise that the Fed did cut aggressively. But you know, as I said, when the Fed was raising by 75 basis points at a time during the height of the pandemic, other central banks didn't do that. So let's see if they will do the same on the way down. So as usual, we'll bring you all the latest in the fundamentals and technicals. So stick with us, stay ahead, and until next time, have a great trading day ahead. Bye for now.